Financial Phil. Phil, good morning to you.
I don't appreciate this introduction at all today, guys.
You're not fond of being a chemical toilet, I guess, huh? Phil,
Yeah.
how'd you like the draft this weekend, man? Our team, of course, the Steelers. I thought they did pretty well. How'd your Chargers do, Mike?
I thought the Chargers had an excellent draft.
Get Dylan involved here, too. He's a Ravens fan. Dylan, good morning to you.
Morning, Rob.
Yeah. How did you like the Ravens draft?
I liked it pretty well. In terms of football players, they couldn't have done much better with their first 2 picks. Now, the second one was a little questionable on the person, but we'll hope for the best there. I unfortunately really liked Pittsburgh's first 2 picks.
I thought they finally were smart.
And I think
the last couple years.
The best thing is Cleveland being Cleveland. It's just every year.
They have 5 quarterbacks now. Only 4 can play right now because Watson's on. He's not going to play. Phil, what do you think of the Steeler draft?
I liked it, and I can't say that I knew a lot about the players other than the Ohio State players. But, looking back at the positions that they picked and kind of, really what stood out to me, and I said this to Dylan, is I think they drafted good humans. And good humans don't win football games, but they help locker rooms. And I think they got a lot of good human beings on their team. And after Cam Hayward, whenever he runs out of time, they're kind of void a lot of good human beings on their football team. And, I think some of these guys, if they can stick, and we get really excited about the draft. That's what I was telling Dylan. You get really excited about it, and this player's going to do this, and that player's going to do that. But usually the next year, they have very little impact on in year one. Very little impact to avoid a handful of players. But I liked what they did. I liked the direction they went, and nothing against Shedeur Sanders, but I'm glad they didn't reach for a quarterback. I was scared to death that they were going to reach for a quarterback like they did Kenny Pickett a couple of years ago, and they didn't do that, and they took a flyer on Will Howard, who could end up being a good backup. Who knows? I mean, guy's huge. Maybe he ends up being a good quarterback someday. But next year's the better quarterback draft. All the noise was around them getting a quarterback, and they didn't succumb to that and reach for a quarterback. So I'm happy with the draft.
I want to thank Dylan and the Ravens for our draft because they ran for 299 yards in that playoff game, and that finally opened up Mike Tomlin's eyes that he'd better get bigger, stronger, and younger up front on defense, and that drove the point home. So if you have to take a loss to go forward, that was the one to take, and they reacted appropriately in this draft, I thought.
Yeah, I mean, Derek Harmon.
Yeah, a lot of big bodies.
Yep, you were saying, Dylan?
Derek Harmon, I was kind of surprised went even as low as he could just in terms of talent. And then Caleb Johnson was probably one of the best running backs in the country outside of Ashton Genty, and they got him in the 3rd round. Yeah,
because we didn't have a 2nd-round pick. And so I was pretty happy with the running back and all that other stuff, too. So that was cool. And then from a local note, something I'll be watching is the kid who quarterbacked our 2018 state championship team at Oakdale, Colin Schlee, is working with the Ravens and the Commanders. He's going to attend both of their mini camps, and the Commanders announced they were looking at him as a quarterback / H-back / wide receiver. Interesting kid. He's a big kid, 6'4", 225 pounds, great arm, and a tremendous athleticism. He rated 22nd of every quarterback who's gone through the NFL draft and gone through these combine skill challenges and everything that they do. He's the 22nd best in the history of the combine, which is pretty good when you consider I think there's been several hundred that have gone through that. That was pretty good. He runs a 4.5 40, which is pretty fast for a kid that size. So I'll be interested to see how he does. Maybe he can catch a practice squad slot his first year, maybe. If he's lucky, that's cool. But it's pretty neat for the program, which is only 12 years old, to have a kid finally get a shot in the NFL. That's pretty awesome. Phil, let's talk money. We had a good week. We had a good week last year. It's a down year so far, but a good week last week. And this week is very earnings heavy. Let's talk about this.
Yes, last week was, and this is important. So we've had these bad week, good week, bad week, good week for April, and last week was a tremendous week. And it was, I wouldn't say it certainly wasn't void of tariff talk, but tariff talk wasn't as loud as what it had been. I think we're getting a little desensitized to the tariff discussion, and real things kind of led the docket, with earnings. And this week we have 180 companies out of the 500 S&P, out of the S&P 500 that's reporting this week. Most importantly, the likes of Apple, Microsoft, I think Amazon reports this week. We have a slew of economic data. So hopefully we can be quiet on the front of tariffs, where we stay somewhat desensitized to it, and there's nothing drastic that would drag us down. And when you look at April as a whole, and it's been a bad year, and it's something that we like. It really we haven't talked a lot about. It was a down year before Liberation Day on April 2nd. It wasn't the best of years to begin with. It wasn't the best start to begin with. But as the month finishes out, if we finish this week out, it could turn out that April is kind of flat. And to me, that's amazing. The volatility that we've had, it's been extremely volatile to both sides, good and bad. And if we can finish out flat, or where it's kind of an end, so, not that big of a deal, then I think that would be a really positive thing. But with all the noise and all the fears that we have, what's kind of lifted us up, John says this all the time, the stock market will follow corporate earnings, and while they haven't been great, they've been about what's expected, and forward-looking guidance has given us a boost. So we're not in as bad a shape as what it feels like we are, and sometimes the media tells us that we are.
This morning we are slightly lower with the Dow, the S&P, and the NASDAQ. And interest rates is something I've been watching too, Phil. The 10-year Treasury this morning is up a little bit, but it's been anywhere between the 4.4s and the 3.9s over the last month. This week, this morning, it's at 4.28%. And I know that the mortgage rate is often tied to the 10-year Treasury. So it's unlikely we're going to be living in the 3s, but the low 4s at least is a good sign.
It is, and it's another point of volatility that we've had. You just gave the range here of recent note, and that's a drastic range for bonds. Bonds are kind of boring. That's why they don't get a lot of attention in the media. But this is a reminder to everyone. Most people have some bond exposure in their portfolios, especially your 401ks and your IRAs. You've got some in there. It may not be a ton, but you've got some. And the older you are, or the more reliant upon your portfolio, the more of those the bond exposures that you have. But when you look at those on a daily basis, those that do, very few people do. But when we look at those on a daily basis, when you're looking at the yields, you want to see those yields actually be red. You want to see that in the red, because that tells us that the current bond price, or the current value of bonds, the market value, has gone up. So the yields have gone down. So that means your current holdings had done well that day if the yields are in red. That's how they express bonds, is in bond yields. But they have been all over the place, and it is difficult to pinpoint what's going to happen with bonds, because we've got a mix of all this stuff going on, and how's the Federal Reserve going to react to what's going on? You got the projection of what tariffs could possibly do to inflation that would slow the Federal Reserve from dropping interest rates. And then in conjunction with that, what does that do to equities? And let's look at, we just talked about big tech companies. And the big tech companies and those that, some that lie on the NASDAQ, or growth as we would classify them in an asset class, they're most impacted by the movement of bonds. So you see some extra volatility thrown in on the mega tech or the growth companies, and some of that is due to tariffs and all the talk about China, but a lot of it's due over the uncertainty of either good or bad in the movement of interest rates. So it kind of, the mega tech, as volatile as it has been, and in some cases really good this month, but as volatile as it's being impacted by three things. One, the growth it had over the last couple of years, so it's at it was at a very high point. Two, what will the tariffs with China, how's that going to impact? Because we know the relationship with a lot of these tech companies in China and the tariffs. And three, and maybe the most important but the least talked about, the movement of interest rates and how it's going to impact these companies. So that's another reason why this week is really important, not just because there's 180 companies reporting. Of course, that's important, but the ones that are within there with Apple, Microsoft, two of the three largest companies in the world, Apple and Microsoft and Facebook and the likes, as they report, not just what they report, but what's their forward-looking guidance and how do they plan on preparing for tariffs, and what do they think it will do to their business.
Oil prices are at $62.96 a barrel. Starting in May, OPEC Plus has said that they're going to add 538,000 barrels a day to their output, and we have a very aggressive energy policy right now under the Trump administration in this country to go along with that. So the question is, A, when will the prices at the pump come down to match these drops in the oil barrel price that we have? But two, oil prices are kind of an interesting balance, aren't they, Phil? If they go too low, that's a problem for those who drill for oil, and if they're too high, nobody can afford gasoline.
Yep, it's almost the price of oil in the neighborhood of $65 to $90 a barrel seems to be the happy point where consumers are okay with it. We may grumble, but doesn't really change much, and it doesn't really impact the cost of food at the store to the point where it's a problem anyway. But when it gets too low, then that kind of signals a demand issue. Think back to COVID, where it was great that you could get gas for, I don't even know what it was, $1.50 a gallon. I don't even remember, but it didn't really matter because we weren't going anywhere anyway. So that's kind of the point where, we talk about deflation a lot, and everybody says, hey, I want prices to deflate. Well, really, we don't. We want certain prices to deflate, but we don't want that entire basket to deflate. It's almost the same thing with the price of oil. If it goes too low, it is absolutely an issue because it's telling us that there's a lack of demand and that our economy isn't doing well because we're not traveling, we're not going to and fro and freely, and the price of travel is becoming an issue. So it can become a problem. And I think back, and don't hold me to the year, but I think it was 2015 when OPEC flooded the markets with oil, and it really hurt the American companies, the wildcat companies, the smaller companies that couldn't sell their product for that low of a price, and where the bigger companies could, and ultimately it flushed a few of them out. And just simply because they couldn't compete, they could not sell their product for that. They just didn't have the capital, the backing, the cash in order to take that short-term loss. And they couldn't meet payrolls. It caused some issues with a handful of banks that sponsored those companies, that had loans out with those companies. So it did have a ripple effect. So there is a point where low gas prices, it's not necessarily that the gas prices are low, it's the reason that they're low that could be an issue.
Good morning, Phil. It's John.
Hello, John.
I have the Wall Street Journal up on my pad right now, and the Dow, S&P, and NASDAQ are all green. I don't know what you're not by much. You mentioned that essentially that rhetoric has an impact on the markets. And I'm curious. I would like to think when we see these big swings, like we're down 37 somewhere last week or the week before, I would like to think that the markets are controlled by the institutional investors, the ones who actually understand what's happening, as opposed to mom and pop who listen to the television and panic and do their thing.
You would be correct. Yep.
And how much of an impact do mom and pop investors have on the actual stability of the markets?
No, very little. And, when we look at, making a trade for, for us, it could be something massive. And I even include, your investments with a financial planner as a mom and pop, because if I were to go in today and buy 1,000 shares of NVIDIA or Apple or Microsoft, that is a blip on the radar. It means absolutely nothing to the overall markets. Where it can, and this is a cool case study, and I'll probably never forget it, but remember the GameStop craze. That was even though it was teenagers, we would refer to that as mom and pops all came together to make something matter, but they had to do it on an individual stock. A very small company with GameStop, that was the case where mom and pop did make an issue or cause the price of a stock to skyrocket and then eventually fall. But it took that type of effort for mom and pop. And I'm glad you brought that up. It took that type of effort from regular Joe on the street to make a very small company move higher. So when you look at an overall indice, it has very little to no impact. And it is the institutional investors. It is the huge mutual funds. And in some cases, it's the algorithms. Look back to Liberation Day, and that was kind of, one event set off another, but it was algorithm selling. And then the following Wednesday, when we announced the pause, when President Trump announced the pause on tariffs, and we had one of the best days in stock market history. Well, some of that was, it was institutional investors, and it was mom and pops, it was everybody coming together, buying back into the market. But ultimately, what kind of continued that on was algorithms that lie within these exchange-traded funds and institutional and mutual funds and hedge funds and the likes, where it's not a human sitting back there doing it. It's a computer program that says, hey, if this price reaches that, then I must do this. And it just happens automatically. It's all done, a lot of it was done by algorithms, and that kind of exasperates the volatility higher or lower. But you are 100% correct. It's very little of this is actually mom and pop sitting in here, sitting on their phone or calling their financial planner or their financial advisor, asking or requesting to make a move. It is the institutional, the mutual funds and the exchange-traded funds and the likes that cause the extreme volatility.
So, Phil, talk about I keep hearing all the time the strength of the dollar versus the weakness of the dollar. How is a strong dollar bad for the market? That confuses me.
Yeah, strong, and it confuses a lot of people, and it does for me too. Sometimes I have to write it out on paper. But a strong dollar makes our exports look really expensive. So if our dollar is too strong and someone is looking to export you always use a widget that's being built in the United States, and our dollar is strong with it, it looks too expensive to do that, so they may go somewhere else to get their widget, whether it be another country or produce it themselves. On the flip side, if we have a weak dollar, our widgets will look less expensive to those countries, so it would be more attractive for our exports to go out and less attractive if we have a strong dollar. And there's a balance there with a strong and weak dollar. There are points where it's too weak, and that was the fear earlier on in the month. And there's a point where it's too strong, where I think that's part of the fear with some of the tariffs, that maybe our dollar can become too strong and then our exports look too expensive because of the use of tariffs. So there is a fine balance between a strong and a weak dollar. And, there's like a par point, if you will. That's how we price bonds, at par. But there's a par point, and that's my term that I just made up, that the dollar is in a good position where it doesn't look too weak, it doesn't look too strong. It's good for exports. It's good for imports. It's good for everything. Almost just like the price of oil being at that little happy place where consumers are happy and companies are also happy, and new companies can come aboard without going bankrupt. Same thing with the strength of the dollar. Too strong, exports struggle. Too weak, then our imports struggle.
So the Chinese always keep their currency low on purpose so that their widgets are always cheaper. Is that
and that's part of the complaints that the United States have had for years. That it's one thing if it happens naturally, but to do it artificially and flood your market with something, and that's what they've been accused of for years, is artificially weakening their dollar so that their exports look even better to outside countries, and therefore the trade isn't fair. So you guys did this on purpose. Your dollar looks extremely weak, so now everybody's buying your widgets and not our widgets, and that has been a complaint from not just the United States, but that's been a complaint from a lot of countries. That is part of China's extreme growth since the late 1990s, that they artificially make their dollar weak.
Okay, so why doesn't everybody do that?
It devalues currency. Yeah, there was a great thing I saw on one of the educational channels on YouTube about this. Isn't new stuff. It's been going on since they've used gold as currency. What countries would do is they would just start making gold out of less than pure gold. So the gold itself was worth less each time that you kept devaluing it, and then it takes more of that to actually make it to become a meaningful currency again. So it actually ends up inflating the currency. Just was kind of a fun little thing that I saw. I had no idea they used to manipulate the gold product. Anyway, Phil, we've got about a minute left. Go ahead and plug the company.
Yeah, you can reach us at 304-263-4343 or stop by and see us with an appointment at 1270 Winchester Avenue or right here in Martinsburg.
All right, now, Phil, out of the Steelers draft, who's the guy that makes the biggest impact right away?
The biggest impact right away, I'm going to say he comes in on some early downs and gives Highsmith or Watt a break to Big Boy Jack from
Jack Sawyer
from Ohio State. I think Jack Sawyer. I think he makes an impact immediately.
Yeah, he had that big, what was that, a fumble return touchdown in the championship game, right? Yeah.
Even President Trump gave him a shout out when they visited the White House.
I like that guy. He's I think they said 6'4", 260. He looked good in the playoffs.
Big boy.
So did their quarterback, Will Howard. He had a great playoff run there. Phil, thank you. Have a great day, sir.
Thank you, guys. Have a great week.
All right, man. You too, man.